Coming up on Market to Market, a bankruptcy placed directly at the feet of renewable fuel regulations. And urban consumers get fresh produce from a different kind of container. Those stories and market analysis with John Roach, next.
February is the wrong month of the year.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, February 9 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. As Wall Street went through a correction and D.C. figured out how to pay itself for another month, rural America got a glimpse of what its paycheck might be this year. Net farm income is expected to drop $4.3 billion below last year to be on par with 2006 profit levels. Despite the potential for a smaller paycheck, the Purdue CME Ag Economy Barometer rose 9 points as producers expect to pay lower taxes. However, the trade gap widened to $566 billion, largest since 2008, as the dollar remains at three-year lows, making U.S. goods more attractive. Iowa Secretary of Agriculture Bill Northey's nomination to become USDA's Undersecretary for Farm Production and Conservation has been in limbo for 5 months. Confirmation of the appointment has become a political bargaining chip as one oil state senator reaffirmed his pushback over ethanol. This week, the battle spilled onto the Senate floor. 2 other offices down Pennsylvania Avenue were pulled into the finger-pointing over the predominantly corn-based fuel. Renewable fuels were not the main cause for declaring bankruptcy by one of the largest refineries in the eastern United States, according to at least one farm state senator and several academic researchers. Pennsylvania-based Philadelphia Energy Solutions claimed last week the requirement to produce or acquire $830 million in renewable identification number credits was a contributing factor in its financial troubles. RINs are what the Environmental Protection Agency calls the currency of the renewable fuel standard. Producers are mandated to generate or buy a certain threshold of the homegrown product. Iowa Senator Charles Grassley called PES's claim misleading rhetoric aimed at discrediting the program.
If you look at that paper that I put out, you will see that there's many reasons for the bankruptcy at PES, and RINs is not one of them.
The Iowa Republican Senator's office says PES sold 40 million RINs in the fall of 2017 in an attempt to short the market, if the federal government would change policy, thus lowering RIN prices. The energy company planned to buy back those credits at a lower price to fulfill mandates and make a profit. Grassley's office cited continued reluctance on PES's part to invest in blending infrastructure, instead buying RINs on the open market. Several independent studies also denounced PES's claim, instead citing the reduction in access to Bakken crude. Producers in the North Dakota-centered shale region slowed operations as a collapse in oil prices coincided with the opening of the Dakota Access Pipeline, connecting High Plains pumps to the U.S. Gulf Coast. Bakken producers also had more financially lucrative options as the U.S. government lifted a 40-year ban on exporting domestic oil. It became more profitable to export Bakken products and not put the highly volatile product on train cars bound for the East Coast. Texas Senator Ted Cruz wants to put a cap on RINs, and Grassley says the strategy would ruin the ethanol industry. The Lone Star State Republican is holding up a nomination for Iowa's Secretary of Agriculture Bill Northey's nomination to a position inside USDA until the issue is resolved.
The RFS, which is Renewable Fuel Standard, is an important tool in the mission to achieve energy independence for the United States.
President Trump has long championed ethanol in his energy policy. According to Grassley, since Scott Pruitt's confirmation hearing to be head of the EPA, the former Oklahoma Attorney General has muddied waters on the RIN issue, forcing the president to reiterate his support for renewable fuels in an earlier November showdown on the issue involving farm state elected officials and the White House.
What you've heard latest from Pruitt does not, about RINs, does not square with what his own department put out in November 2017, that RINs is not a problem like a lot of people here in Washington are trying to make it out to be a problem.
Hydroponics, aeroponics, aquaponics, all are accepted methods of producing food without soil. Some are in confined spaces located a distance away from rural America. Many have achieved success, while others have suffered dismal failure. This has not stopped the entrepreneurial spirit seeking ways to feed more people, cut costs, and reduce carbon footprints in order to give year-round access to certain foods. Peter Tubbs has more in our cover story.
So there's no doubt, and I hope that during the course of the year here, we will definitely inspire a number of these people to embark on a lifelong journey to be farmers.
The here is the Bedford-Stuyvesant neighborhood of Brooklyn, New York. On the edge of the parking lot of a former Pfizer pharmaceutical plant sit 10 shipping containers. Each has been converted for growing hydroponic vegetables under LED lighting. 10 laboratories for aspiring agricultural entrepreneurs growing food that is unique in product and location. The brainchild of Tobias Peggs, Square Roots is a nonprofit that aims to bring fresh produce to urban consumers by training farmers to build businesses in their communities. Each container has the production capacity of 2 acres of land and promises a better quality product by maintaining a consistent environment.
And obviously people are increasingly moving to the city, right? So we got to figure out how to farm in those urban areas, whether that's indoors in containers or whether that's outdoors, in more sort of urban gardens or greenhouses, whatever it is, the more food that's being grown close to the city, the more access that people have got to local food, the better.
Square Roots mentors spend a year teaching the how-to of business and hydroponic agriculture to classes of recruits who dream of becoming urban farmers. Few of the entrepreneurs arrive with an agricultural background, so the learning curve can be steep. Farmer Josh Aliber spent his year learning to grow basil and build an audience for his crops.
I spent the first 2 to 3 months walking around from restaurant to restaurant in Manhattan, meeting chefs, learning about what they value, learning about how I can improve my crops, and becoming a better farmer. So the startup time was really hard, but it worked because the product that we grow is so fresh, and you say, I harvested this today, they taste it and they say, I've never tasted basil like this.
Freshness is only one of the selling points for the Square Roots farmer. Growing crops unavailable in the wholesale and retail supply chain can help close a sale.
A lot of these chefs have been in the culinary industry 30 to 40 years, and as a brand new farmer, because I'm growing in a really unique environment where I can grow really unique crops, I can bring them things that they've never tried before. And the taste speaks for itself because it's growing in the exact environment that it wants.
The taste drives a solid price for produce. While a salad mix starts at $10 per pound, rare varieties of basil command $30 per pound at local restaurants. Each farmer develops a customer mix of restaurants and food retailers who buy in bulk, and individuals who purchase salad greens through a subscription model. The greens are hand-picked and delivered up to 3 times a week.
So we feel that the way the product is priced today is definitely mass market, but every single day we work to improve the technology, make the system more efficient, that will allow us ultimately to bring down that price and ultimately fulfill the mission that the company has, which is to bring real food to everyone.
The physical constraints of a square roots container farm limit the types of crops grown by each farmer to just the small and valuable. Salad greens, kales, sorrel, Swiss chard, and herbs are best suited to the vertical towers inside the farms. Crops grow quickly under the red and blue LED lighting optimized for plant growth. A footprint of only 400 square feet allows a farm to squeeze into tight urban environments and shorten the literal distance from farm to plate. Under LED lighting, some crops go from seed to harvest in as little as 8 weeks. The container farm has operating costs of roughly $1,000 per month, but requires only 8 gallons of water per day. Once a crop rotation is developed, harvesting can happen each week, year-round.
So what we're able to do is create unique environments for crops in very urban settings. Today we're in Bed-Stuy. I personally grow crops that you wouldn't typically be able to find in a local environment.
The ability to simulate varied environments is another advantage of growing crops inside a container. If a variety of basil prefers a specific temperature, humidity, or altitude, the environmental controls within a square roots farm can be set to mimic ideal growing conditions. While the ability to grow a high volume of quality produce in a small amount of urban space has been confirmed, price is the next frontier. For urban container farming to scale up and become affordable for a neighborhood, the cost per pound will have to decline.
The fact that we're able to compete now tells us that as we really increase production and bring the cost down, we're going to be able to produce food at a much, much more competitive cost that's better quality than is already existing in the marketplace.
Until then, the farm incubator will continue to experiment with a food supply chain that can be measured in yards rather than miles.
At the end of the day, I think what the consumer wants is food that they can trust and that tastes really amazing. And if you know your farmer, you trust the food. Once you taste that food, you're won over.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
U.S. export numbers and Thursday's WASDE shook the market from its slumber. World stocks were cut across the board and global wheat supplies were pushed higher as South America took some bushels back in corn and added a few in soybeans. For the week, March wheat gained 2 cents while the nearby corn contract moved a penny higher. Good growing weather in Argentina was countered by a reduction in global stocks, which helped the soy complex. The nearby contract improved 4 cents. March soybean meal led the sector by expanding $12.40 per ton. March cotton declined 62 cents per hundredweight. Over in the dairy parlor, March Class 3 milk futures gained 1 cent. The livestock sector's steady drip lower made for a rough week. The April live cattle contract shed $2.50. Nearby feeders weakened $4.73, and the April lean hog contract dropped $4.70. The U.S. dollar index continued its slow climb back up, increasing 129 points. Improved domestic production collared March crude oil with a nearly 10% loss, or $6.25 per barrel. COMEX gold dropped $21.60 per ounce, and the Goldman Sachs commodity index tumbled nearly 31 points to close at $425.90. Here now to lend us his insight on these and other trends is our senior market analyst, John Roach. And in case you want to go over things that John said, you can download or listen to our Market Analysis and Market Plus podcasts online anytime at iptv.org/MTOM. John Roach, welcome back.
Thanks, Paul. Great to be here.
Well, is it because of things? I mean, there's a lot of red, except commodities. Wheat, corn, soybeans actually kind of had some of the green. Let's start with wheat. You've got sell signals in Chicago and Kansas City. Why?
Well, the market ran up based on weather. The dry conditions through the hard red winter wheat belt it's just bothering people a lot. And we think that crop is being hurt a little bit and maybe even more than a little bit. So that gave us strength in the market and gave us opportunities to make sales, some of the best prices we've had in quite a while.
So can this run continue, and is it only dependent on what the weather does?
The weather's the thing that's pushing us up.
Okay.
There's really not much on the bullish side other than U.S. weather and maybe some weather in some other spotty areas. But by and large, we have plentiful supplies. When you look at an ending stocks graph, it's in the world, it's the biggest number that we've had, at least across the history that I've followed.
But we do have, the smallest crop since 1909, the winter wheat crop anyway. So, I mean, that gives you some hope that there won't be as much supply, but we're pretty darn good at raising wheat.
Well, and the problem is that we did that last year. We actually had that small acreage. This year, the acres are a little bit bigger, which surprised people when the government gave us their numbers. So we're dealing with too big of surpluses, and to the degree we can threaten those surpluses with a crop threat, then that helps the market. But as soon as we lose it, we're afraid that we'll lose the price too.
All right, speaking of price, is it time to pull the trigger on a sale?
On wheat?
Yeah.
I think you should have.
Yeah.
We think that's on strength, you need to be making sales, we believe.
Do you hold a little bit for more profit, or do you take the profit where you can if you're in that situation?
Well, I just think that you have to reward the market when you get the surges up, and then you wait a little bit, and if we get another surge, we'll reward it again. But we expect really the market to make most of the weather adjustment really over the next 30 days.
All right, well, let's talk about that. We have another very specific corn question, and it comes via our Facebook page, and that is from Troy in Cobb, Wisconsin. And he is asking, John, with December 18 corn at $3.90 and March 19 corn north of $4, he's asking, how aggressive should a guy get on selling? If you were to sell, do you re-own the right off the bat, or do you wait to get in later?
I'd be a very patient seller on new crop corn. We're not even into our selling season, which we officially mark starting March 1. And so patience. We've got a situation going on in South America that really bears close watching. There's quite a bit of the corn crop in Brazil that's not yet been planted. 70% of their corn crop is a second crop corn, and they don't have all their beans harvested yet, and so they don't have the corn planted, and it's raining and expected to be very wet here over this next short period of time. So we think those numbers are going to be smaller. We know the acres are smaller already in South America. Then you have Argentina, which has been very dry and hot, and has stressed their crops. And we've seen those corn numbers be reduced several different times over the past few weeks. So we think that there's maybe something here to drive this corn market further. And so we think the biggest numbers on corn are in the rearview mirror. As we look out forward, we're not going to in 2018/19 have the kind of surpluses we have today as we see it.
So you're saying supply a little high, the high is behind us, but the high might be in front of us
as far as price is concerned. What we think is that we'll have a normal kind of a seasonal bounce into our growing season. When we worry about what the production numbers are, we'll be looking at the final numbers coming out of South America, and we think those numbers will be smaller, and we think that will be put more pressure on us to raise a big crop in this country, and so any little weather issue we think will be quickly felt by the market.
So if you were at a point to sell some old crop right now, how far do you think you should be on that path? How much should you be taking advantage of what the price we have now?
Well, we think old crop corn's different from new.
Okay.
And the question was about new crop, and I'm really saying
correct.
With new crop corn, be patient. You don't have we don't have a big rush to do anything right there.
Okay.
As far as old crop's concerned, there is more of a rush, and we do have big inventories we're going to have to deal with this fall, and so we think you have to sell the strength in the market. We sold corn on the rally we had this week, and we'll be willing to sell more corn on further rallies. Again, we'd rather go a little bit slow during this time frame. We can get more aggressive as we get into March, April, May, but you have to be a seller of strength on old crop corn, and unless you want to really gamble everything on the weather, and be careful doing that.
I would imagine so. All right, let's go back to new crop then, and I'll put you up. How high do we see new crop? I mean, if we're pushing $4 like Troy's asking, how much height do we have in this new market?
You don't know. I mean, it really all depends upon the weather, and we've got three crops at risk: the Argentine crop, the Brazilian crop, and the potential new crop of the United States. So we think at this point, rushing out and selling corn a long ways out into the future at a very low price level is exactly what people did in 2012. And then when the weather turned sour, they went, "Why did I do that for?" So don't be panicked. We have smaller supplies ahead and better price levels ahead. Be patient.
Same story in soybeans?
I think the story in soybeans is similar. I mean, we have smaller acreage in South America. We have smaller crops in Argentina, but they're almost all being offset by bigger crops in Brazil. The crop's coming off slower, and it was planted later. It's wet down there, and so the harvest is moving slower. Everybody was waiting for the Brazilian beans to come on stream, and they're coming on slowly. As a consequence, we have maybe a little opportunity for another bounce back in the market. We were sellers on the last rally that we had. We had a 10-day sell signal, so we had lots of time to get everything done. I think U.S. farmers are going to be reluctant to sell anything until they bounce back at least as high as we were, and most likely higher. I think the Argentine farmer is going to be afraid to sell because the crop's burning up, and I think the Brazilian farmer is afraid to sell because it's still in the field. So we have a period of time where the demand pull in this market should be pretty good, and the supply is not quite available. Now, one problem we're having here, which has just changed in the last week and a half, and that is the dollar has gone from being a very weak dollar. Now we're strengthening the dollar, and the Brazilian real is falling down, and so we're losing competitive advantage from a currency standpoint. This week was a bad week from a competitive standpoint.
Right,
but
on the dollar.
It's availability that is helping this market right now.
All right, you alluded in your newsletter today about a window. There's a small window. What are the factors, real quick, on that window?
Those three things.
Those three things?
Those three
Nothing
things.
different?
No, nothing much different from that.
All right, so time to make a sale on new crop, or do you hold on new?
We've been willing to sell $10 plus new crop beans.
Okay.
We thought the 10 to 10.15 prices we got to, those represent an opportunity to sell that first increment of new crop beans out of the field, we think.
All right, well, that's really all the positive news. We should just wrap it up and say goodbye because the livestock people don't really want to talk about what's going on. Give us a little something here, John, that's helping that complex. There seems to be a lot going on in cattle, like there's a demand for it, but the price doesn't reflect it right now.
Well, actually, the prices have been pretty good. I mean, if you go backwards and take a look at what people thought we might have during this time period, we're actually pleasantly surprised by some of the prices. This week has not been a good week, but last week was a very good week.
It was.
And we saw people selling cattle down in the southern feedlot areas at $1 over the June, $1 plus the June. We think those are just really good contract prices. We're concerned about what we're going to have forward here in the second quarter. And so we'd like to get another rally back and like to be a hedger, but this week we didn't get that with what's going on in the equity markets and so forth.
So equity, you think, was tied more, was impacting more the livestock?
I think we scared everybody about everything. I mean, when you have a 1,000-point swing in the Dow three times during a week, I mean, that's something that makes everybody wonder about, okay, now where do I want to put my money at right now? And most people seem to want to go to the sidelines.
Well, that's been the question about, we haven't, and we'll discuss it in pluses. Do you think the money from equity is going into commodities? You're thinking it's just going to go rest for a little bit.
I think if you look at the commodities this week and look at the equities, the money went to the sidelines across all of those. Energy prices fell apart, precious metals fell apart. Some of our grains didn't, but about everything else did.
Well, yeah, crude oil down nearly 10%, natural gas nearly down 9% on the week, copper down 5%. Yeah, a lot of red.
Now, maybe that money, you know, as things calm down, the volatility slows a little bit and so forth, then maybe money comes from the sidelines back into commodities. But if I'm betting on it, I'm going to bet it's going to go right back in the equities because that's where the people have been making money.
All right, and that's where we've been heading. All right, in feeders, are you hearing about in the southern parts where it's drier, Texas, Kansas, they're pulling some of these feeders ahead early? Does that set us up for something better down the road?
It might. Our placement numbers have certainly been bigger. I mean, we've got 8% more cattle on feed, and so we've been pushing the cattle into the feedlot. There's not much wheat pasture, and almost none. Very little went out onto the wheat pasture, and so yeah, we've advanced that. However, feeder cattle prices are still too high the way we look at it. So we think you be patient on buying near-term replacement cattle and shop a little bit.
Shop a little bit. How long do you hold off to make that, to go shopping?
Well, with these kind of markets that we have, you can put a lot of emotions, and so you could get surprisingly good sales opportunities with this kind of an emotional type of a marketplace.
Is there a lot of emotion in hogs?
It's kind of a negative emotion is what we're experiencing there. The good news is that our exports are good. The economic conditions around the world are good. We think we're going to have good demand. We just have got to work our way through numbers. That's the real key, is to work our way through the numbers and and we think we'll be okay. But again, we have bigger numbers coming out forward that we're going to have to deal with.
All right, before I let you go, real quick, crude oil back below $60. Does that spiral continue lower?
Perhaps we might be able to take it down a little bit more, but I think that we're going to find some real value down underneath there. And take a look at natural gas prices.
Yeah.
Natural gas prices just collapsed this week.
Yep.
If you're a buyer of natural gas, you've got to be paying attention here and don't miss your buying opportunity.
All right, my opportunity is I have to say thank you, John, for being here.
Thank you, Paul.
All right, that's John Roach, our senior market analyst, and thank you so much for watching the broadcast portion of Market to Market. However, we will keep the conversation going, including answering more of your questions during Market Plus, which is available in podcast and video form on our website. You know what? Like us on Facebook if you would, please. As algorithms change, the more you like, the more you see. Join us again next week when we'll examine how one community was able to harvest dividends after a devastating tornado. So until then, thanks for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.